Good morning, I'm Jonathan Bayes, and it's Monday the 20th of May, and we've had the federal election here in Australia over the weekend. And putting politics entirely aside, if you're an asset owner in this country, you'll be really relieved with the outcome of the federal election, because a continuation of the coalition government for the next 3 years means that we won't see major changes to taxation treatment on the two largest asset classes that private households have here in this country, being shares and property. That'll be a really good thing, I think, in the short term for the economy as well. On the whole, it's perhaps no surprise that the share market, in particular in the Australian dollar this morning, have bounced really strongly. Breaking down it more for you, perhaps, the last 12 months the economy's been a bit soft due to credit rationing in the wake of the Royal Commission. What's exacerbated that softness, I think, has been the threat of a change in government and a change in the tax treatment on those two major asset classes. And that's meant that many property investors in particular had been sitting on the sidelines, and that's arguably made the property market look a little bit worse than it otherwise would have looked. We've had building approvals in this country now at a 6-year low, and more broadly, economic confidence or business confidence in Australia also at a 6-year low. Many businesses, I think, have probably sat on the sidelines in terms of capex or hiring plans in the past 3 to 6 months under the prospect of higher taxation. So business as usual is a good thing, and we actually should see in the next couple of months, I think, a rebound in business confidence, a rebound in consumer confidence, and certainly over the next couple of months, a bit of an uptick again in building approvals, and that's a really good thing ultimately for the Australian economy. As a result, whilst we might get a Reserve Bank interest rate cut as soon as June, I think the prospect of multiple cuts has been diminished. I think the RBA might sit and take a wait-and-see approach to how the economy looks in the wake of the election result. And so on account of that, as I say, the Australian dollar's bounced a little bit further this morning at 69 cents. It doesn't take away the household leverage that we have in this country. It certainly doesn't take away the fears that we continue to have for the global economy on the US-China trade issues by any stretch. But locally here in Australia, we've had one major threat of a pretty significant air pocket, and something that we've been very cautious on and warned about for several months. It does relieve that pressure, and so we're not surprised that the market's had a bit of a bounce this morning. We'll have more to comment on this in the coming couple of days. Also last week we had some news out on BWX, which we're not overly concerned by. A bit of a change in management, a change in the guidance on the company in the very near term profitability, but we think the longer term story in BWX is perfectly sound. We had some great news out from one of our international investments, being VGI, and the prospect of being able to put more money in there as well. But really, last weekend's all about the federal election, and as I say, if you've got a share portfolio or a property portfolio here in Australia, you'll be pretty encouraged by the win over the weekend of the current government. Anyway, I'll leave it at that. Thanks.